Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
All right, Dan, so I want to talk a little bit about data. And you always, every month, you know, one of the biggest reports we listen to or we review, is the John Burns Real Estate Consulting.
Yep.
It's one of the leading research firms out there, right?
Yep.
First, tell us a little bit more about what is John Burns? What does it mean to you? Yep. Why do you send it out to your leaders every month?
Yeah.
Maybe we start there.
Yep. So I've been a Burns subscriber, for 20 years probably. So I think they're like the oldest and probably most reputable data provider and forecaster in the country. And what I think sets them apart, they kind of don't have another competitor. They are the foremost authority of data and analytics. But is that they're also, in addition to collecting like historical data, they're forecasting. And they're forecasting based on surveys from like economics, people, surveys from home builders, public company, CFOs and things like that. And they always source everything. And so to me, that's like a big deal for data is where it's sourced from. So, that fine print at the bottom of those charts, I love those like Instagram things where people like, post a chart and there's no source to it. And I'm like, well,
where did you get this data
boring.
from?
Tell me where the source is. Yeah. But yeah, I would say if you see one and you got a John Burns Real Estate and Consulting on it, it's legit. Like they're the foremost. Every public home builder relies on them for their data. They're just the best, in the space.
Yeah. You know what's so funny is what I'm learning about real estate is there's so many trends that impact real estate.
Oh yeah.
One of those is employment. Yeah. The other one is the number of permits. Yeah. Why is it important to understand employment, and how do you use John Burns to correlate that?
Well, employment plays a big factor into like our general economy in general, right? That employment number, you hear it was part of our election cycle. We heard constantly, is that employment number accurate? Is it not? The way that it's measured for the sake of like John Burns and the way that we would measure it is we measure, employment growth. Right. How many new jobs are being created in the country year over year, right? So like that's the statistic is how many new jobs have been created. So it's not like how many people are unemployed. That's a different statistic. Yeah. We're talking about new jobs being created because new jobs, it's like the first leading indicator to housing. That's how it starts. And so the John Burns report, this month's report just came out yesterday, and I'm cruising through it. I thought what was cool is like year over year, we had, according to Burns, is that we saw 2.4 million new jobs in the United States year over year, which is great. But you got to remember, we're coming from a COVID year in 2020 where we lost almost 9 million jobs. Right. So we're still as a country kind of catching back up. A lot of these jobs have gone remote, different things like that. Doesn't matter. Right. What they're talking about here is like how many new jobs have been created. And, so that's a pretty good indicator. It's still below the national average for the country. Right. Typically in the country, there's somewhere in the neighborhood of about 2 million to 2.5 is on the low, and then you might have as many as 4 million new jobs being created in a year. So that's kind of the barometer for us. So we're, 2.4 is good coming out of COVID, and like we had to rebuild some jobs, but it's not like blow the doors off. It's not like all of a sudden everybody's like looking for people to work because they don't have enough people to work,
Right.
So we're still.
And this is important because you think about your long-term portfolio, right? Can people you need a quality tenant, as
Yeah.
what we talked about on the episode before. And so understanding employment growth is extremely important. So I love that you
Yeah.
correlated that and using data. The other part is you have to get a permit as well from a growth perspective as
Yeah.
well. And John Burns also includes that in their data, correct? Correct
They
me if I'm
do,
wrong. Yeah.
yeah. But like before we jump to that, I
Yeah.
think before we unwrap on unemployment is when you're looking at real estate and you're forecasting 5 years out, like what the world's going to look like, it's important to look at employment data because now you've got to understand like, am I leading into like my property might rent today for $2,500, but if the employment numbers are going down, am I bringing some risk to the table? Like,
Yeah.
is it possible that I could see
Yeah.
some sort of like a recession, or I could see something where there's a market decline? And so I think what's cool about this data, and I think we could share this chart with our audience too, is that they forecast all the way out until 2027 on new jobs coming in. And what was interesting about the report, because I read it last night, is that they were talking about a lot of the jobs being replaced by like AI and stuff like that.
Yeah.
So, I mean, it's not perfect, right? Nobody's got a crystal ball, but based on what they've got for data today, they're saying that this is what we would see, and it's still over time, like it's still seeing growth,
Yeah.
and it's by the time we get to 2027, we're back to where we were in 2020, but with the number of jobs, like people have jobs. Does that make sense?
Yep. It totally does. Yep.
Yeah.
Yep.
So I think it's like, it's just because the number's going down of number of new jobs, you got to compare it to like, because there's only enough jobs for as many people and industries and stuff like that. And so, there may not be a lot of new jobs created, but everybody will be working essentially is what this is saying, which is good. So a good indicator. But yeah, housing permits, is another thing that is
Yeah. You got to
huge,
get
right?
permission first, right?
Well, yeah, I mean, the housing market a lot of time is very predictable based on the public home builders
Yeah.
and the number of permits that they're pulling.
Right. Right.
And the reason that is like they're investing billions of dollars, right, in infrastructure to build new homes in the U.S. And we have a significant housing shortage in the U.S. But the number of permits leads to like all kinds of other stuff. So it leads back to employment, right?
Yep.
Because
Yep.
if the more permits I get, I need more people to work on those jobs to build these homes, right? So that leads to that one. Then it's like, these people are going to buy them. So it leads to sales. It's a leading indicator for a lot of different things economically,
Yeah.
is the number of permits being pulled. Like if you get to an environment where you see no permits pulled or low permits pulled in a market, that's usually a sign that there's no growth in the
Yeah.
market.
Yeah. Yeah.
So you can do this on a macro level, micro level, whatever. We'll talk about a macro level now. It's the U.S. housing permits, right? We saw just under a million housing permits last year, right? And so that's pretty good. But they're predicting now that it's going to go up by 4 or 5% over
Yep.
the next 4 years,
Yep.
which I think is great.
Yep.
And I think we heard that a lot during the election, is we heard that they were going to not only focus on housing affordability, but solving the housing crisis comes in two forms. It's not just making the homes affordable, it's also making enough homes for people to live in,
Yeah.
right?
Yeah.
And so like affordability becomes like paramount to that, but it's critical that we actually have the physical structures for people to live in. And I think that's what the biggest fear is right now, is that, so there's some great incentives for public home builders or home builders in general to start pulling permits, making it a little bit easier for
Yep.
them, making it a little more advantageous. They all pay these big impact fees to the city when they do this. The municipalities reduce those. They have some tax incentives for these groups, right, to make these deals pencil
Yeah.
and make the properties more affordable at the end to the end buyer at the end of the day.
Yeah.
So those are two huge like leading indicators that, we can start to look at for economic growth.
So would you say John Burns is your cheat code because you're following employment and you're following where permits being
Yeah.
pulled, right?
Especially when markets are changing,
Yeah,
and like
absolutely.
that I feel like we're in. I just feel like right now, I know the markets that we operate in. So in all 78 of the metros that we operate in, we saw a 34% increase in the number of new listings in the last 45 days.
Mm-hmm.
That's it. That's a big number,
Yeah.
right? That means like, now we're starting from record lows. So it's not like there's just an overabundance of supply, right? We're still below
Right.
in most markets for like 4 months of supply, 6 months is a norm. We're still below a normal market, right? Making it still a seller's market technically. But it's a big change.
Yeah.
It's a big change. And with that big change, like, does more change come? Like what starts to happen behind it? So I think it's worth keeping an eye on these leading indicators. I like to look at them on a monthly basis here with Burns, just because I trust them.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.